Hello and welcome to the special coverage of Men's Investment Summit 2020. On the sideline of the panels, I am in conversation with Rajesh Yabaji. He is the CEO and co-founder of BlackBuck. So Rajesh, welcome to the show. You were on the panel of talking about how to get the unit economics right. So what is how do you get the economics right?
I think the panel was quite interesting with various mix of people talking about unit economics, right? I think unit economics is as you were discussing there as well, right? I think it's quite a thing which a company has to pay attention to right through the entire stages, from setting up to scaling to exit an IPO as well, right? So what I think is truly about it is that in the early phase, it's pretty difficult for the company itself and the investors to get a hang of what the unit economics are. I think what's important is at that stage is to really understand if the profit pools in the market exist and what they are, and bet on that and bet on the teams, right? And then as you keep sort of scaling, I think it's important to really make a conscious attempt and figure out whether at scale those unit economics would get achieved or not, right? I think that's like probably the sum and substance of our discussions, and I think the journey for BlackBuck in this case had been quite a different one, where to begin with, the company started having very thick economics at the early stages because we were very consciously growing, adding business one by one and not really, putting the entire impetus on scale, right? And when Series B stage of the company happened, we were like EBITDA break even. I think post that, after raising good amount of money, and when we said that the company needs to scale, that's when essentially we lost the discipline of unit economics, and that was broadly in the year like 2016. And I think after that, it's really important to add two perspectives here, right? One is the basic unit economics principles, where if you're going to make this much of revenue, if this is a cost, what is your gross margin, and then how does it flow to your contribution margin? I think this discipline is important. I think what's also important is the other levers of investments, which typically is in terms of what do you really spend to acquire a customer and what's the lifetime value of that customer, right? If you're able to intertwine these two and keep unit economics in check as you keep scaling the organization, I think you're up for a home run.
But these are ideal situations, right?
Yeah.
But
Yes.
do ideal situations actually, occur when you are striking a deal?
I think the truth about this entire thing is that the journey of building a company is pretty uncertain, where I think in the early stages, broadly, I don't think you have even the clarity for more than 20% of the bets which you are taking, right? And as the company sort of progresses into the mid stage, I think that number clarity, starts hovering at like 40 to 50%, right? And so, the truth behind all of this is that yes, when you are in that thick of scale and expansion, it's important for you to use derivatives and explain the unit economics, right? When you don't have it, obviously, how it is going to look like in the future, and keep doing as good as possible, putting your best efforts basis.
Right. So shifting focus to something, which we of course had a discussion at the panel about the venture capital. Do you think the kind of macroeconomics that is playing out in Indian macro and of course globally, there is a slowdown, there is a disruption in the kind of investments that's happening, and probably with the global central bank putting a lot of money, and China, which is one of the largest economy, probably having a shutdown this quarter. How does this all risk pan out when you're taking a call in investment?
So basically, I think there are two views of this, right? One view is that there is a rampant global slowdown, and the slowdown was actually leading in India before, because we saw that in the last half of the last year, right? I think there are two perspectives in which you could view this, right? I think one perspective is that, hey, things are sluggish, and in this, if you try to invest, I think, is it going to yield dampened returns, right? I think that's like view one, right? View two is that everybody is receding from investing, right? Which means that this is probably the best time, and the best times where you could buy things at the right prices, and you could basically put the best times for probably risk capital to be put to use, right? I think there are the two perspectives. For BlackBuck, I think it's the latter, because trucking as an ecosystem, it gets sort of impacted first when there is any kind of such a slowdown, right? Being a technology platform, being able to power users by by technology, where their visibility, their transparency, their ability to get to know the right prices, all of that enhances. I think for us, it's more on the other side where, look, I think every month we are trying to look into how can we bring the next million users onto our platform, starting to transact, right? I think that's what like is on in our mind. And also I think something which really is helping us is the tailwinds of Indian digital economy, right? You'd be aware of the entire electronic tolling India going mandatory. That actually brought in a large number of truckers going digital onto the platform of BlackBuck, right? And today, like 1 in 3 trucks in the country is powered by BlackBuck, right? So I think so there are like two views over it. I think in the context of Indian digital economy continue to rapidly grow, and in that we are putting risk capital like into use when people are investing less. So I think that's my view on the current status.
So you're actually, one of the few speakers who are, really betting on the slowdown and saying that probably this is the right time to invest. So considering this is the strategy that most, investment strategies are, having right now. So are you expecting some bigger deals in the next 4 to 5 quarters?
From BlackBuck's side, answer like, I mean, it's like we're always open to deal making, commercial deal making, equity deal making. I think we're always open. I think it's basically will be decided by our business plan. I think we've raised a large round about a year back. I think we are sufficiently sort of with for our capital needs for the last next 3 to 4 years. I think it just depends on how more do we want to invest, and which geographical areas do we want to really expand further into. Because right now one of the biggest mandates of expansion for the company is European expansion. So BlackBuck today is present in India and Europe. So I think our investment mandates will decide what deals we do.
Right. But, at the same time, as we speak, there is a global health scare. Probably there is going to be some investments which are withdrawn. You mentioned Europe as your destination probably in the next few years. Would you reconsider your investments?
We launched last year already.
Right.
And we are doubling down on it.
All right. But there is a risk coming up because of the
Yeah, so I think there is a risk, but I think
if not fully withdrawn, if I may have to ask you, maybe do more due diligence.
I think we're staying on our course steady, and by a very simple logical principle, things which do well, we double down. Things which don't, we retract. Because I think in the journey of BlackBuck, I think there would be 1,000 things we tried, and probably 990 failed.
So
and
learning
then
from your learning lessons.
Exactly, right. I think that's the way how companies are built.
All right. So one last question. What has been your key takeaways from attending the Mint Annual Summit?
I think the event brought together a lot of people. I think there were a lot of friends whom I did not meet for a good long time. Was able to catch up with them, and I think very interesting set of people who are attending the event. So overall, it just brought together good fraternity, the like-minded fraternity under one roof on this day. I think valuable learning.
So on that note, thanks a lot for talking to us.
Thank you.
So for more details and updates, stay tuned.